Figma is the hottest IPO of the year, and like every big IPO, investors are confused. Should we buy the stock into the hype? Is it a good investment? What's a fair price for Figma? In the next 5 minutes, we are going to answer those questions. I'm not gonna waste 20 minutes of your time talking about their business model, their big clients or subscription tiers. Plenty of video are already doing that. I'm going to tell you, in my view, at what price Figma is a good investment. But if you don't have 5 minutes to watch this video, I would recommend you stay away from Fig stock. Like always, this is not financial advice, I'm just sharing what I am doing for your entertainment. My name is Adri. If you are new here, I value stocks using a system I created called the Value Ratio. The good news is that the system is working. My portfolio is up over 30% so far this year, beating the S&P 500. The even better news is that the value ratio works not only for public stocks, but also for IPOs like Figma. The bad news is that valuation is an art as much as a science. We need to make assumptions about the future, and no one knows the future, so my assumptions could be wrong. Specifically, we need to forecast 3 things. Figma's operating margins, their growth rate for the next 5 years, and their risk score. Let's start with margins. In their S1 filing, Figma reported 91% gross margin and 18% non-GAAP operating margins. A company like Figma selling digital products with margins similar to Adobe should be able to achieve at least 26% operating margins once it matures. For context, Adobe is around 35%, but they had 40 years to optimize. 26% for Figma valuation seems reasonable to me. Next, growth. Figma grew revenue by an incredible 46% last year, and that's fantastic, but almost every company slows down after the public offering. In fact, they often go public because they see the initial hypergrowth phase slowing down. I have other fast growers like Reddit and IMS pegged around 25-26% for my valuations. I believe Figma can grow even faster, so I'm using an ambitious 30% compounded annual growth rate for the next 5 years. Finally, risks. Figma has a strong moat, but it operates in a very competitive sector with giants like Adobe or startup like Canva or fighting for the same market share. Figma is a small company, so there are some extra risks there. It's also unclear how AI will change or disrupt this space, so for those reasons I gave Figma a risk score of 30 out of 100, medium-low risk. To give you an idea, that's a little bit more risky than a company like Adobe, but it's definitely safer than a company like Oscar, which I talked in my last video. So, with those assumptions, 26% margins, 30% compounded annual growth rate for the next 5 years, and 30 out of 100 risk score, what's the verdict? I get a fair value of around 12 billion, which should correspond to a share price around $20. The IPO is priced higher, around $26, $28, and my guess we will see a gap up on the first day of trading to $35, maybe even $40. There is a lot of hype around this ticker, so we will see a lot of volatility. We might see a pattern like Reddit IPO, where the initial hype causes a spike, followed by a sell-off as early investors take profit before the stocks find its low. I don't know exactly what will happen, but my valuations assumptions seems reasonable. My plan is simple. I will not be participating in the IPO, nor I will buy if the share price is $35, $40. However, I will be ready to open a position if the post-IPO volatility pushes prices under $20. I know it's unlikely, but in the market anything can happen. Since Figma price will probably be too high, I would recommend you to buy a different stock. For example, the healthcare sector is definitely oversold lately. If you're interested, give a look to this video about a stock I bought some days ago. Thank you very much for watching Adri Economics. I hope this video was helpful. Please like, comment, subscribe. Thank you again. Peace out.